Welcome back to my mini-series on mechanical trading with TradingView. Today's lesson is basics of placing a trade and trade management, and some of the trips and traps, and a couple of settings you will likely want to change in your TradingView. We will flip over to TradingView in a second. There we go. You'll notice mine probably looks a little different from the one from yesterday, or from the other video. That's because I run in Darkview, and going forward I will be using Darkview in my videos because this is my default usage. To show you how I got here, up in this top corner, which you cannot see, up here you can click into this, and here's dark theme here. I don't want to do that. I just want to show you this is what I use. I use this here, dark theme. Would you like to change the template? No. Okay, coffee time. Leverage and margin are a little complex and difficult to explain. I will try to in the rest of the video, but the truth is you don't really need to understand how they work in order to trade a risk management plan effectively. The too long didn't read version of this is very simple. You don't really need to understand how leverage or margins work. The only thing that you need to understand is that you can make this trade worth $10, or you can make this trade worth $10, so that you will never lose more than $10 on that trade. Or you could make this worth 100 and this worth 100, which allows you to make your trades consistent, and that allows you to control your risk consistently for your strategy. So again, post-edit, I've realized that explaining margin and leverage in detail is quite a lengthy process, and so I will put that in a different video, and I'll leave this one to focus on settings that will make TradingView a more useful experience for us. So back to the video, and we'll talk about margin and leverage another day. Spread bid ask markers. Right, this is more important than you realize. You may not know what they are yet, but we will enable them because they are really important. Under scales and lines, so what I did here, by the way, was I just right click and go to settings. It's also available up here. Under scales and lines, we go down to bid and ask, and we set them as a line. As you'll see, here are the bid and ask values, and I'll show you why they're important in a moment. The other thing I do is I turn off all of these events. I don't know why I have events up here. All this goes off. This is annoying. I hate it. It's gone. Okay. The bid and ask. I'm going to zoom up into this so that we can see what's going on here. There are three lines here. We have bid and ask, and we have market in green. You may notice that these two, the bid and ask, are larger than my candle. Okay, you need to think of these as the broker's commission. If you want to buy something at market value, when you use, from my previous video, when you use one of these, you get the market value. If you buy this at market value, if I tried to take this trade like this, and I wanted this to be above that candle or below that candle, I would take this trade and it would instantly close me out at a loss, because this is the commission that I am paying, and my stop loss is at the commission price. So what I'm saying is that if I open this like this, it doesn't buy me here, it would buy me here, and I have to get all the way back up to this point. Make sure I'm recording here. I have to get all the way back up to this point just to break even. The bid and ask can change throughout the day, and it is a trip and a trap that will catch you out, especially as a new trader. Additionally, when this moves, you need this blue line to not the market price, not the green line, to get up to your stop loss or your take profit rather. You need the blue line to get there, so your green line has to go past it in order for it to close out the trade at the profit that you wanted. This is important, and the reason it's important is, as I stated earlier, these can be bigger than the candles that you're working in. And if you think that that's not a trap, then when you realize that you can do this on the minute scale, and if you were to zoom into minutes, let me zoom in here to minutes, right? Here are my minutes. If I tried to take this trade here from this point to this point, okay, you need to understand that my bid and ask are significantly larger than the candles. And the instant I place this trade, it will just close me out at an instant loss, because I am taking the trade at this point or at this point, and I'm already I'm opening the trade at a price larger than my stop loss. So when we go back to hours, you will hopefully realize or understand that spread is a huge concern when you are opening at market value. This right now is quite a large spread. The markets are closed, and this at open and close times, this does expand to huge margins as it has now. During normal trading, if you're intraday or day trading, during the normal market hours, these become much smaller. But this is a great example right now of how large these can get and how they can trip you up. That is why they're turned on, so that we can visually see them, because otherwise you will miss it, take a terrible trade, get closed instantly, and you'll be asking yourself what just happened and how did you lose that money. One of the really beautiful things about this, I'm sure you may not realize, appreciate, or understand, is the fact that it does this monetary calculation for you, and it's built into the app. Usually what you need to do is you will mark out your trade like this. You will say, I want to make this trade like this, and you'd have to mark it out in one tool, and then you physically take that and you copy that price there, and you'd have to take it to another tool called a pip calculator to figure out how many units it actually would be to make that trade at that price, and then you'd have to take that and then drop that information into your broker tool. You need 3 windows open to make one trade. With TradingView, all of that is done in the app for you, in front of you, and for me that's a beautiful thing, and for you I think it simplifies and streamlines trading so much that it allows you to focus on developing a robust strategy, learning the tools without all of the overcomplication. It streamlines things so much that you just shouldn't worry about anything else, and you should just focus on this. I wish I knew this 10 years ago. I wish this existed 10 years ago. With this understanding in place, in my next video I would like to explain a little bit about risk management and recovery versus fixed risk strategies and the differences, and maybe a bit about how Edge works, or how you would want Edge to work. Anyway, that will be the next video. I've talked enough in this one, and I will see you over there.